Hi everyone, welcome to Digital Expert. So India is setting its sights on becoming a major economic superpower, and one sector stands out as a key growth driver, the infrastructure sector. From power and bridges to roads and urban development, the infrastructure sector holds immense potential to fuel the economy. So the Indian government is continuously increasing its capital expenditure to support this growth. The infrastructure space is full of opportunities. So today we'll be exploring the best infrastructure stocks that could benefit from India's ambitious plans as the country is set to become the world's largest construction market. So today we'll be discussing 6 infrastructure stocks. So there will be stocks from both power and road infrastructure development. The first 3 stocks will be from the power infrastructure and the next 3 stocks will be from road infrastructure. So don't forget to subscribe to this channel and do share my videos with your friends and family or anyone who might be interested. So let's get started. First, let's talk about 3 stocks that are engaged in the power infrastructure development. So the first stock is an Indian company that plays a crucial role in power infrastructure development. So it specializes in the construction, testing and commissioning of power plants and provides construction services for infrastructure projects such as road, bridges and railways. So the company offers comprehensive operations and maintenance services for power plants, ensuring there is high efficiency and reliability by maintaining turbines, boilers and other critical equipment. So this stock is also involved in the manufacturing and fabrication of steel structures and components which are required for power plants and industrial projects. The market cap of the stock is 8,683 crores. The stock I am talking about is Power Mech Projects. The current price of the stock is 2,746 rupees. So Power Mech Projects undertakes civil engineering and structural construction work for various projects including industrial plants and buildings. So this stock is also diversifying into renewable energy projects like solar and wind and developing water management infrastructure such as wastewater treatment facilities. They also provide operations and maintenance services. So Power Mech ensures that the power plants operate efficiently, reducing the energy cost and the environmental impact. Price to earnings ratio is 31.80, which is lower than its sector P ratio of 35.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 13.9%. Next stock is a leading Indian multinational company specializing in engineering, procurement and construction projects. So it operates across various infrastructure segments with a primary focus on power infrastructure development. So this company is a key player in the power transmission and distribution sector. They design and construct transmission lines and substations and also offer turnkey solutions for power distribution projects in over 70 countries. The market cap of the stock is 32,349 crores. The stock I am talking about is KEC International. The current price of the stock is 1,215 rupees. KEC also works in railway sector, handling electrification, signaling and telecommunications for railway infrastructure. So it is also involved in civil construction for metro and rail projects. In the civil infrastructure domain, the company develops buildings, factories and urban infrastructure. It is also expanding into industrial and residential construction. So KEC manufactures power and telecom cables, supplying them for various industrial applications. So KEC also provides solutions for water supply systems, sewage treatment plants and urban smart infrastructure. So KEC is a company that employs advanced technologies in the transmission, distribution and smart infrastructure, contributing to an efficient power system. It also supports India's infrastructure vision through initiatives like Make in India and Green Energy Corridor. Analysts has given a 48% buy rating for the stock. Price to earnings ratio is 76.72, which is higher than a sector P ratio of 35.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 8%. The next stock is a leading player in the infrastructure sector with a strong focus on engineering, procurement and construction services. So this company specializes in power transmission and distribution, constructing high voltage transmission lines and substations across domestic and international markets. It also provides railway electrification services, including overhead electrification, signaling and telecommunication systems. The market cap of the stock is 20,669 crores. The stock I am talking about is Kalpataru Projects. The current price of the stock is 1272 rupees. Kalpataru Projects undertakes cross-country oil and gas pipeline projects as well as water supply and irrigation projects for substantial water management. They also execute large-scale civil construction projects like buildings and industrial structures. So Kalpataru has a significant global presence, operating in over 60 countries, and they contribute to the development of critical power infrastructure worldwide. The company adopts advanced technologies to ensure that there is efficient and reliable power transmission systems. They are also engaged in renewable energy projects. So Kalpataru is a reliable partner for government utilities and private corporations in delivering large-scale infrastructure projects. Analyst has given an 85% buy rating for the stock. Price to earnings ratio is 39.42, which is higher than sector P ratio of 35.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 10%. Now let's discuss three stocks from the road infrastructure development sector. So India's growing infrastructure needs driven by the urbanization, population growth and government policies create strong opportunities for the road infrastructure development companies. So the first stock is a leading infrastructure company based in India, known for its extensive work across various sectors, including transportation, marine, industrial and urban infrastructure. In the road development, this stock is known for constructing highways, expressways, bridges, flyovers and tunnels. The company uses advanced technologies to build faster and more sustainable infrastructure. The market cap of the stock is 20,050 crores. The stock I am talking about is Afcons Infrastructure. The current price of the stock is 545 rupees. So Afcons is a newly listed stock. Afcons enhances regional connectivity by reducing the travel time and improving the transportation safety. Its notable projects include the Mumbai Metro Line 3, Chennai Nashri Tunnel, and major urban infrastructures like the Marine Drive Bridge. So its projects contribute to the economic growth by facilitating trade, logistics, and industrial activities. Afcons adopts sustainable construction practices aligning with India's eco-friendly development goals. So the company has a strong reputation for delivering complex projects on time and within budget, both in India and internationally. Price to earnings ratio is 44.57, higher than sector P ratio of 35.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 18%. The next stock is one of India's leading infrastructure development company, primarily engaged in the construction, development, operation and maintenance of roadways and highways. So established in 1998, this company has played a significant role in shaping India's transportation sector. So this company operates through various models, including the build, operate, transfer. So where it builds infrastructure, operates it for a set period and then transfers it to the government. It earns the revenue primarily through the toll collection during this concession period. The market cap of the stock is 35,618 crores. The stock I am talking about is IRB Infrastructure Developers. The current price of the stock is 59 rupees. So IRB Infrastructure Developer provides EPC services for constructing roads and highways, including the project design, execution and maintenance. So this company is also involved in public-private partnership where the government partially funds the project and the private entity is responsible for the construction and maintenance. They also operate toll plazas for revenue generation and is a significant part of its business model. They are also diversified into real estate and other infrastructure projects like airports and urban development. IRB plays a crucial role in improving the connectivity across states, enabling a smoother and faster transportation. So its projects support economic growth by enhancing the trade, tourism and commerce. So with a significant presence across the country, IRB has built and maintained thousands of kilometers of highways. Analyst has given an 83% buy rating for the stock. Price to earnings ratio is 57.82, higher than sector P ratio of 35.30. Debt to equity ratio is higher than 1. Return on equity for the last financial year was 4.4%. The next stock is an Indian road infrastructure company primarily engaged in engineering, procurement and construction services. So this company focuses on the maintenance of roads, bridges, flyovers and other infrastructure projects. So this stock is majorly engaged in road construction through its EPC business with a particular emphasis on hybrid annuity model projects. The market cap of the stock is 9,454 crores. The stock I am talking about is SG Infra Engineering. The current price of the stock is 1,400 51 rupees. So this company's clientele includes prominent government bodies such as National Highway Authority of India, Ministry of Road Transport and Highways, as well as private road developers like IRB Infrastructure, Tata Projects, and Adani Road Transport Limited. So the government sector contributes about 92% of the company's order book, while the private sector accounts for 8%. It does not have any manufacturing plants. Instead, they have invested in a broad base of construction equipment, including crushers, compactors, graders, and many more. Analysts has given an 85% buy rating for the stock. Price to earnings ratio 17.66, lower than sector P ratio of 35.30. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 19.9%. If you like this video, don't forget to subscribe to this channel, and thank you for watching.